Hi there, welcome to this week's market analysis. So as usual over here, we're gonna give you guys a quick summary of what happened last week, and we're gonna take a look into this coming week's news event, and from there we'll look into the technical charts and share with you some of the opportunities that you want to keep an eye on for the current week. Now last week was pretty interesting. So we saw the Federal Reserve, FOMC, actually raise rates to 2.5. Okay, however, nothing much of an unexpected event because the market has already priced in that the Fed is going to raise it to 2.5. Right now, I think what's more important is to look out for how the inflation is going to be developing in the US. Okay, if you start to see inflation pull back a little bit, then moving forward in the future FOMC, we're probably not going to see such an aggressive hike anymore. Okay, however, I would say my personal opinion over here is that there's a high possibility the Fed is going to continue hiking a little bit more before we're going to see the peak of interest rate. Okay, so over here you can see last Friday we have a very important data coming in at core PCE price index as well, and it came in at 0.6, which is above the market expectation, and of course it's an increase from the previous month data as well. Okay, and core PCE price index is actually one of the core and important data that tracks inflation. Okay, so we do still see the inflationary pressure piling up in the US as well. Okay, now going into this coming week, Monday we do have a couple of bank holidays, so I do expect that Monday market is relatively going to be slow. Tuesday we have the RBA cash rate, and over here we are expecting that the RBA is gonna hike it by 0.5, bringing interest rate to 1.85 over here. Again, most banks are now in the hiking process, so nothing much of a surprise there. And following that, on Thursday we have the Bank of England. Okay, so again we're expecting a 0.5% hike, and Friday over here we do have the Canadian labor data as well as the US NFP plus average hourly earnings. Okay, so I think next week it's relatively gonna be an eventful week. We do have the RBA Australia related with Bank of England, which is pound related, and to end off next week we have the Canadian and the dollar coming in on Friday. Okay, so definitely there are gonna be there's gonna be some volatility in the market, so do take note of such risk event. Now with that, let's take a look at the overall technical patterns and technical analysis over here. First up, we're gonna take a look at the dollar index. Okay, right now what I'm seeing over here in the dollar index is we can expect a little bit more downside in the dollar. From an Elliott Wave perspective, we do have a 1, 2, 3, 4, 5 completed. This rejection and reversal here is very impulsive. Following that, we have what we see here as a potential expanding flat. And we are kind of expecting the dollar to actually weaken a little bit more towards 104.25 next week. Okay, so this kind of gives us a overall directional bias as well, because if you are trading on a major, the dollar index give you an idea. Similarly over here, if you're looking at the equities market, usually a weakening dollar is beneficial for the equity sort of things. Okay, so dollar index going into this week, we're holding on to a bearish bias with a target around 104.25. Now that brings us to the euro dollar. Euro dollar over here kind of have an inverse relationship with the dollar index, but the dollar index has indeed break out of the consolidation as we can see just now. However, the euro dollar is basically still kind of within a corrective pattern. Okay, so over here do look out for upside, and if the market is able to break above this consolidation and corrective pattern over here, and as long as price is able to maintain above this recent low at 1.0095, we can expect more upside potentially towards 1.0423 or 1.04 trend T. Okay, so next week, at least for the start of the week, you can expect a little bit more upside for euro dollar. Now for those of you who managed to capitalize on pound dollar, you can continue to expect a little bit more upside. There's a bit of volatility and choppiness, and we can expect that to continue this coming week because of Bank of England. But from a technical point of view, there's a good possibility we're going to see price reach towards 1.2320. So overall, I'm holding on to a slightly bullish perspective on pound dollar as long as the price maintains above this low at 1.1960. Now for Aussie dollar, what we're seeing over here is the first break of this entire diagonal has happened last week. Following that, we see a corrective pattern developing over here. And from an Elliott Wave perspective, this seems to be a leading diagonal. And because of that, I'm actually a bit more cautious in buying it immediately. Most of the time when we see a leading diagonal, we want to wait and be patient for at least a decent pullback first. And over here, I'm using a bit of a Fibonacci retracement, so we're expecting a pullback towards 6850 or even 6820 for a potential buy opportunity for Aussie dollar. Okay. Now the other possibility is that this can just keep developing in a very corrective manner towards the recent high over here at 0.7060. If that's the case, then it will be even an ideal situation that we'll look for the short instead. Okay, so Aussie dollar, we'll see. I think you need to keep track of how price is going to develop together with RBA coming in on Tuesday over here. Now next up, we have the dollar Canadian. Now dollar Canadian is developing as a crawl pattern, is what we call it over here. Basically, it's the inverse of the Aussie dollar pattern, right? You see a sharp move. Following that, the market continued to trickle down, but in a very slow manner. And right now, what we see is that we do have a bit of confluence in terms of support level over here. The market is testing the previous significant level, and it's not going down very sharp, right? So most of the time, we can't expect that the market will at least retrace back up or even do a proper reversal. And we're expecting a potential buy setup over here in dollar Canadian, targeting at 1.3, okay, or towards 1.3050. Okay, so again, we do have some event as a catalyst coming in next week, especially on Friday, labor data, as well as the dollar there. We do have the NFP, right? So keep an eye on those. Cool. Next up, we have the dollar yen. Okay, so dollar yen has been falling quite nicely. If you're able to capitalize on the sell trade, that is fantastic. I think the pattern is clear. Initially, we had the break of that trend line. Following that, we have a consolidation pattern, and market just basically continued to fall, right? However, if you're not in any of a sell trade in terms of dollar yen, my personal suggestion here is to be a little bit patient, because if you look at this here from a Fibonacci extension perspective, the market is already testing the 10123.6, and most of the time we're gonna see a little bit of consolidation and the market reaches this ratio. Okay, so do give it some time. If next week you start to see a nice decent consolidation over here, then you want to look for the downside, right? So dollar yen, I think quite clear in the direction, but you probably need to give it until perhaps Thursday or Friday, which kind of coincides with the NFP. Okay. Now, in terms of commodities, gold market, hopefully you guys are able to capitalize on that as well. So we do have this 1, 2, 3, 4, 5, very nice little pushback to the upside, a very nice rejection. Following that, we have a very nice consolidation. So every time you see a pattern like that, you know there's a high possibility the market is gonna go continue, right, in the impulsive direction that he has established. Now, gold over here, from a macro sentiment, fundamentals, DOT perspective, a lot of indication is pointing to upside and bullishness on the dollar. In terms of gold. So my personal suggestion over here is don't cut yourself short. If you see any buy opportunity in gold, capitalize on that. Okay, you might want to adopt what we call a trailing stop loss management technique. So you do not have a fixed target, but what you essentially do is just trail your stop loss to protect your capital and profits, and you want to ride it as far up as possible. Okay, now from a forward time frame perspective, we do have a little bit of a resistance level over here around 1805. However, if I bring you to a higher time frame on the daily, you can see, there is a good possibility, because this is essentially a range and we are seeing a very clear 1, 2, 3 wave completed within this consolidation. There's a good chance this would break above this recent high, and we'll see gold reaching beyond 2000 level. Okay, so again, that's why I say don't cut yourself short. I think there is huge upside opportunity in gold. Just pay attention to it, okay, and capitalize on any buy opportunity that you see. Now, in terms of Smp Equities Market, personally, I would say be a bit patient. Yes, we do have a little bit of a breakout over here from this upwards channel. The move to the upside is also rather impulsive. However, until we see a decent consolidation and pullback, I don't think you want to be buying it right now. Because what can happen over here, you can see the market is already at a 123.6 Fibonacci extension. What can happen is it can easily do a rejection back down, perhaps a deeper consolidation before the next move up. Okay, so you want to time your entry a little bit, wait for more confirmation before buying into the Smp or even general equities as a whole. Alright, so that's all from me for this week. Again, to quickly summarize, I think one of the key opportunity that you definitely want to keep an eye on is none other than gold. The upside potential is huge. Following that, the next clearest setup is going to be on the euro dollar for the week. So all the best to your trading, and I'll see you guys in the next one. This video is partly sponsored by Zenfinix, bringing you the weekly market analysis. And of course, if today you would like to take your trading to the next level, or if today you're very new towards Forex trading, then we do have a collaboration together with Zenfinix where you can actually get the 4 Trading Pillars Masterclass for free, fully sponsored by Zenfinix. All you have to do is click on the link in the description and find out more how you can actually get access to this masterclass for free.